Valens Research, Uniform Financial Analytics.
Raytheon, the aerospace and defense firm, the defense supplier to the U.S. government and many other governments around the world. And when we look at Raytheon, we can see this is actually a far higher return business than as reported metrics reflect. And also, while as reported metrics reflect a decline in ROAs the last 4 years, it hasn't been there. But the other thing that we can see, which is really powerful, is it is not just a question of whether or not the business has high or low return on assets. We know that not everybody focuses on return on assets, right? Many investors just care about show me EPS and EPS growth and show me PEs. Well, if you looked at EPS growth for Raytheon, you would see a company that you thought had negative earnings last year, right? It's not just that earnings declined last year. Earnings went negative in 2020 and in 2021, they're focused to also. Well, on a uniform accounting basis, what we can see is, yeah, returns fell last year, but returns were still $3.30, $3.27 to be exact. This is still a profitable business in the midst of the pandemic, and return on assets didn't dip as much as reported metrics make you think they did. This is a higher return, higher earnings business than you realize, and less volatile than you think it is if you're looking at as reported metrics. And these are the kind of insights, just very quickly, right, in a 2-minute look, a 2-minute deep dive that we did right here, that we can see only when we're really using the uniform accounting data. And that's why it's so important that we don't trust the as reported metrics, and you make sure to focus on looking at those adjusted accounting analytics, because if you don't, you're missing the actual story. You're making investment decisions for your clients that are gonna actually not lead to good outcomes like the uniform accounting metrics do.
Valens Research, the world's leading source for uniform financial analytics.